Hi there, I'm Dara McDermott, bringing you this special update on Syria with Philippe Dauba-Pantanace, Senior Economist at Standard Chartered Bank in London. So today, Philippe, Brent crude held above $115 a barrel. This was near to its highest in almost a week, as US lawmakers' support for military action against Syria renewed concerns over the possible impact on oil supply from the Middle East. Can you tell us about your geopolitical concerns and what sort of developments do you think we will see this week that could actually impact the markets?
Well, I think that certainly the market is pricing in the political risk that is at play right now in the Middle East and the likelihood of a strike on Syria. Now, I think that a lot of people overlook also that there are actually some tensions on the physical markets right now that are quite acute, and one of them being actually the shortfall out of the Libyan production. Oil production out of Libya has collapsed basically 90% because of domestic concern. And I think this has been one of the major concerns for the market. But there is also a political risk premium that is paid for sure.
Philippe, are you concerned over the risks Syria could pose on Turkey, such as widening the country's current account deficit and boosting capital outflows already being spurred by speculation that the Fed will cut asset buying?
Well, Turkey right now is and has been engulfed in the emerging market sell-off. So I think that the story is wider than this. But what is for sure is that with the latest development on Syria, there is also a political risk premium that is added on Turkish assets. And it's also due to the direction of the Central Bank of Turkey's policy that is adding, I think, some concern for certain investors. So Turkey is definitely paying in terms of a depreciating lira and capital outflow, a combination of these three aspects.
And economically speaking, what other threats does Syria pose on other countries in the Middle East?
I think that generally speaking, it's really about the political risk premium, generally speaking, and that feeds into typically equity markets. We have seen a lot of volatility on the equity market in the Gulf, for example, and that was obviously linked to that, even though there was no a repercussion on the real economy. And generally speaking, this is definitely linked to the general emerging market sell-off and risk aversion.
There has been widespread global concern over Syria. South Africa has urged other African countries and the BRICS to oppose military intervention. Many countries are concerned about how it will affect their countries, economically speaking, such as India and Ireland. What do you think about the global economic fears of this conflict?
Well, it happens at a very difficult time indeed for the emerging markets. It actually happened at the worst time because they have all been suffering, I think, from the Fed's tapering talk, and so it fits within that broader scheme of a rise in risk aversion. And so I think that there was a pre-existing condition, I would say, on emerging markets and the sell-off that we have seen. And any likelihood of a Syrian conflict would definitely compound that situation and would probably push higher risk aversion from money manager, which will definitely aggravate the sell-off on these emerging markets.
Thanks, Philippe, for that. Well, tomorrow I will be looking at the Bank of Japan rate decision, so make sure you tune in for that. See you then.